All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name, as always, is JB, and today my goal is going to be going over 3 different trade setups that I have taken so far this year, and also just explaining one very basic and simple rule to implement that personally has saved me thousands on thousands of dollars per month, per week, and over the course of the long-term data in a year. If you guys want to follow along with the strategy that I use, of course, it's always downloadable in the description of the video for completely free. And without further ado, let's get right into it. So for those of you that don't know what I'm talking about already, this rule is going to be called a break-even or risk-free rule. And essentially the way that I use it is when my trade reaches one risk to reward, I take my stop loss and I move it slightly above my entry and consider that a break-even trade. Now what this means is that I will not lose capital on that trade anymore. I actually do have a trade assistant that I use on MT4 that kind of operates it for me. So it automatically does it so I don't lose capital. But the goal of it overall is to protect my capital, and what it means is that I am actually saving losing trades by once they get a reaction to one risk to reward, it closes off the risk and I no longer have to worry about losing that position. It prevents too much capital of my account from being on the table at once as well. And overall, in the long term, my data shows that it is one of the most beneficial rules to my strategy, and it is extremely easy to implement if you trade the same way that I do, of course. I know for many other people, minor changes in the strategy can affect whether or not a break-even rule is better or worse for you, but I also think psychologically it is one of the better things that a person can implement as well, because if you are new to trading, you're new to a personal account, it may be a little easier mentally to have a break-even rule in place and protect your capital, minimize your drawdown, and overall net the return from the profiting trades while leaving some of those losing trades behind. So as you can see here, we're going to go over some of the winning trades in a future video likely. So today we're going to be focusing on these ones that have no result here. And by no result, I mean just a bit of profit taken from a break-even position. So the ones we're going to be looking at today is Pound AUD, Pound JPY, and Euro JPY, which actually just concluded this morning. So we will go and hop on TradingView now and take a look at those. So very simple and very easy based on the trading plan that some of you may have downloaded below. If you want to follow along, feel free as well. But all I was looking at is a very clear and bullish market here, and then a new break of structure occurs, creating this new trading range. And once that happens, I look for number 1, a fair value gap within that range, and number 2, some form of a sweep on liquidity. So this consolidation area, we pushed out that liquidity and broke higher. I do know some people prefer to consider the high of the range, your liquidity here, as price grabs below and then pushes higher. For me personally, when the trend is as heavy as well, I do not need a significant sweep of liquidity each time. As long as I can see some form of liquidity was taken and then price delivered bullishly, I will go and take that position. So from the very low of the range to the high of the range, I take my Fibonacci tool, click the bottom, drag it to the top, and then I have my entry set at that 75% level. So having my entry at the 75% ensures that every trade I take will be a fixed 3 risk to reward ratio. That is what I prefer. That is what many of my students and the other coaches in the community find success with. And I also find that it makes it much more mechanical than a trading strategy based off something like supply and demand, which I may have used in the past. So as you can see, there is another faint line right in the middle here of my Fibonacci tool, and this is the 50% of the range. So the 50% is significant here because when you do have an entry at the 75, a target at the high, and a stop loss at the low, it means that the 50% of your range is where that one risk to reward ratio is going to be, and that is where I move risk-free. So we could see price tapped in here, it consolidated for a little while, came and made one more liquidity sweep on that low, and then we very aggressively pushed higher, hitting that one risk to reward line here, and then I moved my risk off the table. And moving to risk-free does one of 2 things for me. Now, number 1, I get to capitalize on the position if it does move to that 3 risk to reward ratio. And number 2, it protects me from the downside where in a scenario like we're seeing here, price does end up reversing after that 1 risk to reward and taking out my stop loss. So instead of losing 1.5%, which is what I risk on this trade, or for most of you, just 1 risk to reward, instead of losing that, you now actually get to move your stop loss to here once it reaches that level and then actually secure a little bit of profit and protect your account and mitigate drawdown on your capital. So it's a very, very important rule for me. It saves me thousands of dollars. And most importantly, it is a very, very simple rule to implement. In fact, I use a trade assistant, and my trade assistant on MT4, it's as simple as clicking a button, and that button says risk-free at 1 risk to reward. And then it also has a little button below that I can check off, and it offsets spread and commissions. So it allows me to make sure that in all of these trades, when they do get a reaction like this to the one risk to reward and then fall through stop loss, even though my bias may have been incorrect, I still was able to protect my capital and make a little bit from it. So number 2 we're going to look at here was the one that concluded today, and that is Euro JPY. Very unfortunate in this scenario, and once again, shifting back to the psychology factor we talked about, we could see how close this trade came to take profit, and then of course, as we could see, it did fall through and is nearing that stop loss level now. So I am out of this trade at break even already, even though it has not hit my stop loss, and that is because, as I said, once we reach that one risk to reward, I move my stop loss just above my entry level, allowing me to secure a little bit of profit on each position. Similar to the pound AUD trade that we looked at, the first thing I look for is that break of structure in price action here, and we can see it is very, very aggressive with a very clear fair value gap here. I like to see these large fair value gaps here because it shows very high volume institutional involvement in the markets. Nobody like myself can create a move like this in the foreign exchange market, so it helps me better align myself with institutional price and where they may be taking. The second thing I like to see is that sweep on liquidity as well. Now, this consolidation area right before this very impulsive bearish candle and a very aggressive break of structure, these are all very clear things that I like to see in every trade. And then price works its way very low and slowly up a little bit higher. So I did actually have to adjust my fib as this trade went on, and eventually we started making a pullback at this high. Price then worked its way lower. We tapped into my entry here, very aggressively started running towards take profit. And of course, as I mentioned, we fall through to the break even level. Now, this is the second trade that we've gone over today. And for those of you that aren't able to follow, based on my account size and what I'm risking at the moment, I saved myself roughly $3,700 from just simply implementing that one rule on just those 2 trades we've looked at already. And of course, this third trade we're going to look at as well is a similar scenario, where we have a consolidation area, a very impulsive sweep on liquidity with this very large candle here. We then break structure of the high, showing this bullish trend, and this very, very aggressive break of structure. I talked about it before. It is very clear signs of institutional involvement and high volume in the markets. Always helps me better align myself with where I expect institutions to move price. Of course, pairing that with something like a heavy bullish trend. Price then consolidates within that range for a little while. I set my fib from the low to the high, and then I wait until it comes back into my entry level. We did move very aggressively bearish towards it. I get some questions from students sometimes. I do not care for this. I set and forget my orders. Price ended up tapping me in very aggressively, similar to Euro JPY. Ended up moving towards my take profit. Once again, nearing that take profit level here, we did fall through and hit my break even line here, but saving me just under $2,000 once again. And of course, you could see we inevitably hit the stop loss here and price continued to run lower. My bias may have been incorrect here, but I was able to maintain my capital and manage it well, and still managing to maintain this 100% win rate for the beginning part of this year here. Capital preservation is one of the most important things. When you go to private investors as well, they're going to look at how well you manage and maintain your capital. Large periods of drawdown, if they're not managed well, are going to be something that raises red flags for many investors. And of course, for some of you that trade with prop firms, it's another issue as well when your account has an overall drawdown of 10%. So that is going to be all for this video, guys. I hope you can take something away from this, and of course, do some backtesting and data collecting on your own to see if break even is a possible rule for you. But keep in mind, I have saved myself thousands of dollars from this rule, and if it is something that you can apply to your own strategy, collect some data and see if it works for you. Hope you guys got some value out of this video. Thank you all again for watching, and I will see you guys in next week's video.